Hi, everyone. Welcome to Market Kickoff. Tonight is Sunday, February the 1st. Tomorrow will be the first trading day of February. We start a new month. Got a lot of interesting things that we could look at. Yeah, definitely. Thanks so much to you, Coach Hoop. Love to see you here. Yeah, Bitcoin is in a little bit of trouble, but we know this is the Michael Saylor level, and it's had a little bit of a bounce floor underneath it. So we'll be taking a look at that very quickly. So futures are set to open just slightly down. Looks like about, let me check this again here. Looks like about 27 points in the ES, 330 points in the NQ. Let's see how that gap down looks. And let me clean up a couple of charts and then we'll jump right in. I want to go really quickly through a couple of things to keep us on the right side of the tracks. And then, we'll talk about setting up some trades, seeing how they go, right? So let's check out SIL and then gold. And then, oops, just want to make sure I clean all my drawings off so that the world starts clean. So we had a lot of things happen last week. So almost too much to talk about, really. But the big thing was the unwind and concerted motion of many in the ES and the NQ, as well as the metals, all coming in at the same time. So when we see everything sort of converging together, this is an important piece of information. And it's one that makes us go, if I see that again, things are unwinding together and they're all searching for support together. What that means is liquidity is getting pulled out of the market. And when liquidity gets pulled out of the market, very often what we think is support doesn't actually hold. So we're going to talk a little bit about how to look at technical setups when we get into a space that has aggravated selling pressure, aggravated buying pressure, that sort of thing. All right, so let's start. Let me make sure I've got my ancillary information floating here for me. It's going to be important for me to see. Let's start with the E-mini S&P, where we've got it right here. Market opens up in about 15 minutes or so. What do we see? So how do we look at something if we go, oh, now here's what I notice. You might be looking at it saying, hey, here's what I notice. They've been buying the dip. And they've been buying the dip for a long time. If you zoom out, that's what you can see. You can see that they bought the dip for that trend line. And they haven't tested the dip to touch these two levels. And they've broken the touch of these two levels, but it came up to the top over there. So what are we seeing by and large? They're still buying the dips. Still buying the dips. A lot of selling pressure floating around, but they are still buying the dips. So in the back of your mind, you can say to yourself, okay, we've had some ugly looking charts, but what's really happening? And here's one of the big things I want to show you. And let's use a little box. Use a box. Geometric shapes. There we go. So my big thing, I want to do two things tonight. I want to help us use the VWAP, and I want us to sit in a space where we realize that all the markets are auctioning mechanisms. Now, I don't know if you've ever been to an auction. I find them a bit unnerving, but I have been to a few. My aunt was a collector, and she would drag me along to these auctions for all kinds of strange things. And one of the things you notice that if something comes out to auction and nobody knows exactly how valuable it is, you can get it for a song. So why am I saying that? I'm saying that to say this. When we have motion that's collecting and collecting and collecting, they're buying in here, they're coming down here, they're breaking down, and they're coming back up. And they're coming into the base, and they're buying it back up. And they're coming into the base, and they're breaking it down, and they're lifting it back up. When price action slips to these edges, what happens is stops are getting run. So how cheap someone can get in the market becomes cheaper, and people who see this big dip buying event, that's where they go in to take a look at it. Now, what's the big story? My nose is running. I have no idea why. Well, I do know why. I've got some kind of bug. All right, so here's what we notice. Friday's candlestick is sitting inside of Thursday's candlestick. What does this tell you? Indecision. We did not break the low of Thursday. We did not break the high of Thursday. We sat in the middle and we tested the close, came down, held the low. So we're sitting in this bottom range. So as we move forward, let me take this to my default template. I don't know what I'm doing wrong so that this never remembers my default, but whatever. Quite sure it's operator error. Okay, so here's what you're looking at. Inside pressure. That means the sellers have not won and the buyers have not won. They're in decision. Now, this morning or this evening, wherever it is you are in the world, we've got a 27-point gap down at this 69.60. Well, what do you know? Take a look at where that is. Right? If we're staring this down and we go, all right, I see what's going on there. There's the low. It's at 68.94. I've got a 27-point drop, so it's above that zone, right? 27 points is what that puts us at 69.16 and some change. And that is the low of Thursday. So here's my thought. My thought is if it gaps down, it's got this area between 69.55 and 68.98 to resolve. But I would suspect they're going to try and buy the dip. That's just a hunch. Just a hunch, but I suspect that's what they're going to try and do. Okay, let's take a look at the NQ really quickly. Let's look at the same thing. Why do I draw boxes around the behavior? Because the entire market revolves around inventory accumulation and distribution. When we are little traders, we go in and we buy one so that we can sell one. If we're bigger traders, we buy 500 so we can sell 500. We don't buy 500 to hold. Same thing. And what that does is give us an inventory event. Now, if your pockets are really deep and you go, hey, you know what? I want to sell this higher. I think it's going up. And you buy it up here. Your pockets might be deep enough to add in all the way down here, but most times not. And certainly if you're a trader inside of TopstepX, where we're trying to teach you how to manage your risk, That's not a possibility for you because this lasts, 6 trading days before it decides to turn around. So the one takeaway I want you to feel your way through is certainly what is going on in terms of price and inventory. Okay? So that's it. Now, what did we do Friday? The same thing that the ES did. This is an inside candle formation, and it's sitting inside Thursday's candle. So I'm going to draw Thursday's candle. The lows are very close to each other. Now, this one has got a 300-point dip, right? So that's 25.3. 25.3 and some change. So that one's got a little bit of room to run for downside pressure. But here is the closest line in the sand near that low dip. Could it move all the way down to this area here at 25,127? Yeah, absolutely. Okay? So the question is, if you see it coming into a relative support zone, like we got a 300-point dip in the Qs, you might expect them to try and buy it. The floor will be, oh my goodness, can it get back up over the close of the prior day, trading day, which is 25,639. Let's go to RTY. I would say wait at least 5 minutes before you hop on into a big fat trade today. Let the traders tell you what they're doing. So notice with the RTY, old resistance, new support. Here are the wicks. That's also going to gap down. Where do we have? Inventory looks like it's right around here. Midpoint sitting at 2660. Right? That was a buy zone for me last Sunday, and then it became a nice sell zone afterwards. So that was very, very nice. This formation here probably going to give us a little bit of a gap. Let's see where the gap comes. Here are the wicks, 25.73, and the heavy congestion, 25.89. Yes, the moon is very full, very, very full. And that certainly is always something to notice. Okay, here we are taking a look at the YM. I am very sensitive to the moon. It's a tragedy, actually, but I try to stay indoors as much as possible when that happens. So anyways, look at this very large accumulation event in the YM. We had resistance that became support, that retested the new floor of support and came out and in. So literally, this chart has been sitting here since December 11th. It's now February 1. Could it gap down? Absolutely. Where are the dips? Look for the wicks. 48,725 for the first one, and then 546 for the second one. Let's take a look at oil. As those of you that follow me, you know how bullish I am on this one. It's gotten a little ahead of itself, mostly because of all those futures contracts in the forward that are having to unwind. But now, let's look at our Fibonacci extension, and let's put our default template up. You're going to see it sitting right at around 2. I'd watch for rotation in here. Market's about to open. Let's take a look at micro Bitcoin. you know, in essence,
The market is open.
there it is, right? So here is, let's sit here and analyze Bitcoin for a bit. Okay? Now, you know, this literally is the first place we're going to see some sort of pressure trying to be bought at this 77 to 78. Would I touch this as a long? No, I would not. Because in my mind, well, we can't look at one all the way back there. In my mind, this chart could very, very easily, look at this trend line, very easily come back to 56,000. Now, you might be saying, oh my gosh, that's crazy. Well, here's how it works. Here's our inventory accumulation, old support, prior resistance goes into support, all breaking down into this noisy patch. And literally, we're at the halfway spot. So this right now is most likely to be an epic fight club dancing around in the space. Not really sure what the dome looks like here, but I would suspect that this is a dangerous place to be bottom picking, and it's also a dangerous place to go short, simply because it's sitting in a very important zone of contention. All right, let's go to silver. Okay, so spot silver, or what the dealers are paying for silver right now, is about 60 bucks. Some of them are actually saying $40. And we have moved literally $40 since Wednesday. Now, where are we? Congestion. Remember, why do I talk about these boxes? Inventory accumulation and then distribution to the upside. Now, could this could be a massive, very outsized distribution event, but notice, went right up there to 3.5, probably we could have 4. If we put 4 in there, let's see how close we get to 4. Look at that. On the nose. Or just about. Not too far from it. Right? The high, 121.76, so $1 away. But what do we see from this information? We are right here in the pocket of inventory accumulation. This is where everyone said, you know what? If it comes into this zone again, I'm buying it. So be very careful shorting silver here. A lot of people are going to get short silver, and it's going to move and then squeeze. So you want to be extremely careful working through anything that you think silver is going to be doing. Okay? Just take it easy. All right, let's go to gold. Now, gold probably has a little further to drop. The inventory box for gold is much wider. And I'm going to show you how to do this on an intraday formation next. So you can use these great, remember, the market is fractal. And what fractal means is that it's got copies of itself sitting inside itself. Okay? I have coaching hours in the Discord channel this week on Tuesday, something. I'll put something up there. We're going to be going over the same things we go over tonight. Inventory accumulation and using the VWAP in an inventory accumulation event to find out where your motion is to the next. Yes, I will go to crude as soon as I'm finished with gold. All right, so here's gold. Here's our inventory accumulation event. Let's see where it is. 3, just shy of 3.5. That's very interesting to me. But my suspicion is that gold still has more rotation on the downside into the inventory accumulation that was 1, 2, 3, 4, 5 days wide right over here. See this? We almost hit it on Friday. Almost, but not quite. We'll be watching that also. Now let's go to oil. So my thought, as I mentioned when I first started, hey, I think oil's a little long in the tooth. Here's the inventory accumulation event. How do we know how to build that? You just look to the left and see where people are not wanting to sell it below or buy it above. Doesn't mean that it can't slip. Anybody can take price down if it's moving. Anybody can do that. One order can do this. But this is the inventory the price action is moving through in general. The last wave that I drew took us all the way up to 2, and now here we are coming back. Where are the edges? The first edge is going to be 62.32. Actually, this edge right here looks pretty prominent. Resistance, and then 2-3 days of support. So they might try to buy it here. We'll take a look at that. Yeah, we might just do that. Okay, let's go back to the ES. Now, we're going to look at, let's look at a 15-minute chart. Hello. All right. Let's, the chart's not refreshing. Let's try this. Sorry. Woohoo. Okay, here we go. Let's try that again. Here's 15 minutes. Notice I drew the line on the daily wick. Look at where it came into. That bounce action event is sitting right near the edge of our box. Now, you could say, wow, that would have been a great long. Yeah, absolutely. It certainly would have. But that's why you go to the daily chart when you begin the day and you just look at the pictures. When gaps down occur, they don't gap down arbitrarily. They're looking for areas of prior support that they're selling it into, that they're going to say, hey, I'll buy it off that lift. Okay? So, let's take a look and see what's going on. Here is the VWAP. This is the regular VWAP event right here. Let me change this box shading here. Hang on. I don't want a background. Let's leave that background up. All right, so here we are coming up the range. We've got a couple of trend lines going on. Here is a 14 simple moving average. Here's our VWAP. Let's take a look at, this is the last 15 minutes of the day. Let's put an anchored VWAP there. Highest volume candle, anchored VWAP. Now this anchored VWAP is, let's make it white so we can see it really well. We'll put it up 2 points white, okay? Then we will take the anchored VWAP and we will draw it from, I don't know, maybe the low of yesterday. You can pick anything you want. The question is, what is this telling us? It's telling us that trading below this line, people who are long are underwater. And if you're long underwater, what you're going to be looking for is a support action event that forces you to sell because you don't want to lose any more money. So where might that be? My suspicion is that It's sitting somewhere around here. So if the price action comes in, I'm going to wait for it. If it comes in here and it loses, I don't know, 69, let's see what it would have to lose. Let's go backwards in time. Yeah, that's a big stop. It would need to hold. You need about a 10-point stop there. Right? It needs to hold this ledge. Let's go to the NQ and do the same thing. Here's our box. We broke down. There's the first line. Breaking down. Here's the second line. That's the midline of the break. Oh, crud. And I am definitely going to look at your questions, folks. I'm sorry I haven't. I'm just really into what's happening here. So we've got two lines where buyers could come in. First line right here. But see, that's kind of sticky. And so if I do get it here, and I'm going to put a limit buy there, right up there at that line. If I do get it there, I am not going to give that any more than, I don't know, 10, 15 ticks. Not much. 20 ticks, maybe. Okay? So, why am I doing it? Because the daily charts told me the buys were there. Okay, now let's take a look at RTY. 2,600 is a big fat round number for these guys, but their buy zones are not all the way down to here. Now you might say, Anne Marie, what are you doing? Trend is down, momentum is down. Why are you trying to catch a falling knife? All I'm trying to do is look at the chart and place a reflexive trade that allows me to collect 10, 20 points. Not looking for anything gigantic whatsoever. Okay? Let's take a look at oil. Okay, so oil's gone through its first trigger. This is so nice. It's gone through its first trigger, and now it's holding up its edge right here, but the real line for it to head down to is down here. So what might be interesting in this arena is a short that opens at 64. 63.99. And my stop is, I don't know, 25 ticks. Put the stop buy up there. Okay? So, gold ATRs at 135. What does that tell you about relative risk? What does it tell you? It tells you that relative risk is very big. And if you're trying to trade with a small account, you better be perfect. You better be perfect. We need Andre for Market Open on Sundays now. What does that mean? SIL tanking and halting. Yeah, don't trade it if it's freezing, folks. Don't do it. Just don't do it. All right, let's take a look. Let's go to the ES, see if it's holding up any of these edges. And then let's talk about other ways we can use an anchored VWAP. The VWAP is easily one of the best tools you can use as a trader because it tells you where the crowd is sitting and how they got there. So what does that mean? Where the crowd is sitting. Right here, prices are under the VWAP. So in general, the crowd is underwater. How they got there in a very sideways move. What is the slope of the VWAP? That tells you how it got there. And there's no support. So here's something I like to do. If I'm coming into a really important price action event, I will go to the low, say that 5-minute opening low, and I will put an anchored VWAP there. So notice, my 5-minute anchored VWAP and the regular VWAP are sitting about the same, and they are testing the zone. Okay? So, we've got a deep dip. Traders are going to try and buy the bounce, but what they're going to have to do in order for that bounce to be sustained is to get above the anchored VWAP of that opening 5-minute candle. And that anchored VWAP is right here at that close. So if you say to yourself, all right, I will buy it up there. If it goes up there, and my take profit will be somewhere between the high and the wick, right? So I'll be looking somewhere around there for that. As long as it stays underneath, this is downward flow. The wick action I've got marked here, that's why I'm thinking about the buy, and it's moving to the upside. Yes. Thank you so much. And volatility is back, folks. Volatility is not going to leave for a long time. Not for a long time. It's here to stay for a while. So as intraday traders, we're going to be super fortunate to have this kind of movement. So let's take a look at the NQ. We've got to stop by above the anchored VWAP point on this 5-minute, see if it can rotate up. My thought is that since trend is down, it'll bounce up, and then it'll pull back, and then it'll bounce again. Buyers have everything to lose here. They must stage a comeback. If they don't, it's gonna be rough for them. Very, very rough, because the market is priced to relative perfection. And so although we know there's a fierce battle that's going to occur here, we don't really have any idea who's going to win it. I mean, some of us might if we've got a crystal ball. I don't, so I have no idea. I'm thirsty. Okay. I am long MES. Do you know where your risk is? Do you know what your target is? Traders have been buying the dip. Right? So, okay, let's move along. Let's go back to oil. See how these trade. Ooh, this one's going to break already. I feel like it's headed into this lower ledge. Let me see where the wicks are. See if I can put a price action event in there. 62.17. I'll put a limit there. Right, and I will make my stop. 62.02. All right, so let's see if we can. I mean, I don't want to trade this if the chart's a mess. But here we are. Double bottom, right? Here's the heavy congestion zone I spoke about for gold. Here's a double bottom, so you're going to see them arguing over this zone. They're going to try and get in on the quick. Here's the thing. This is highest volume candle of the day. Let's anchor on it, and then let's put the anchor on the first 5 minute. Everything's down. So even if the price action bounces from here, it's very likely to run right into resistance. Now remember what I said when we first opened up. I said when markets are very volatile, the one thing that's troubling for us is that support doesn't behave like support is supposed to behave most of the time. That's very important. So either you're in and you're quick, or you're going to get in trouble. So here they are. Here's a bottoming formation. Looks good, except that the candlesticks are still making lower highs and lower lows. So notice this concept of inventory accumulation. The clean box, we can see, is actually to the left. Do I want to use a GAN box? Sure, why not? So here is this, that's not really clean, it is a little bit noisy. So here is the box to the left. And let's get the default template. Style. Okay, so here's the default template. Remember, if you watch me, you know how I am about the 0.5 area. If price action holds the 0.5 area of an inventory accumulation event, it's very likely to go to the top of the box. Notice, because of this motion here on Friday, it goes to the top of the box and then goes right down to the base of inventory, and then goes to the top of inventory and finally breaks out. Remember what I said on, I don't remember what show I was on. I think I was on with Andre and Nick. I said, listen to what metals do when they're trying to break out of a region, or actually break down out of a region. They test the top and pull back in. If they go all the way to the bottom, they're still in a range. They test the top and pull back in. If they make a higher low, it means that they are attempting to break to the north. Notice the reliability here still is from the inventory box. It's only after the test and then that pullback do they break away and start moving to the north. So what do you expect here? Well, we've got a 5 minute candle going. We can see the buy. We know why. Here's something super important. A lot of traders get caught behind the curve because they aren't planning for the trade that is going to get set up for them. Instead, they're just looking, going, okay, what do I do? What do I do here? See, if you look to the left and you go, okay, where were they acquiring inventory? Notice, just a 5 minute formation, but they are definitely acquiring inventory here because they make an inventory break into distribution, right? What are they going to try and do here, do you think? Build inventory. Right? So if you're thinking about looking at this, remember, trend is down, momentum is down, but this is a bottoming event, and it certainly can climb to the top of congestion. That's where the VWAP is, right? So plan your trade early and then wait for it to come to you rather than trying to chase something, so that you feel an element of control in what it is that you're doing, right? Let's see how everything else is working out. Still waiting. All right. Let's have a look-see. Sideways. Very sideways. It's very sideways. Oh, that's weird. Background of my... Ah, here we go. No. All right. So that's what we have going on. Remember, charts can be messy. We got inventory over here. Top of the range. Actually, maybe get the top of this box. Top of the box? Nah. I'll try it there above the VWAP edge. So you could simply look at this and go, okay, if it breaks above the VWAP here in this formation, notice inventory, accumulating inventory. So we can look at this and go, all right, let me draw a box around that. You can look at that edge and say, okay, I'm going to buy it above that wick. I'm going for it. Where's your stop? 50% of where the inventory is being built. You know, if it doesn't break out, that it's going back to the bottom, and it's got bearish trend, you could certainly do that. But an easy way to look at the market and go, what the heck is going on, is by using your tight time frames. Hey, you know what? I like to use 500 ticks. After I've looked at my daily and my 30-minute, I'll compress into a 500 tick event. So what do I see here? I see traders. See, the 500 gets really clear in terms of the edges very often. And so this formation, look, trend is down. I'm making lower highs and lower lows. If this holds, but I continue to make lower highs, it is going to break. I'm putting it down there into that 15. It is going to break. And you can always do this because it's fractal. You can clone it and you can say, I'm moving it down here. I'm waiting. Now, could you also sell the breakdown? Yes, you could, but you'd want to watch that wick. You want to be very careful about the wicks down here. Can you expand on the base of inventory? It seems like a cool topic. Okay, so here's the simple truth. All markets, see it going right down to that edge. All markets are designed for one thing. Hogue and Hoop tell us this all the time. It's created to facilitate trade. And so what do we want to do? Well, we want to understand the elements of trade. So what are those elements? Well, the elements of trade are, I'm going to take a short right up here.
Order filled.
Okay, so the elements of the trade are, well, first I got to have stuff to sell. So how do I do that? How do I get stuff to sell? I got to buy it first. And if I buy it and I want to take a little bit of profit, then I might just buy it here and sell it here. But if I want to make a lot of profit from an inventory accumulation event, I'm going to keep buying it on the lows, and then once it breaks out, I'm going to try and sell it there. It's inventory accumulation and then inventory distribution. So what did I do in this last trade? I sold it at the halfway point of the 500 tick. Now, in hindsight, I should easily have sold it at the top of the range. right? So now I'm sitting $200 underwater, and I really don't want price action to go higher than this particular edge right here, right? I don't want to lose any more than, a couple $100, but I am sitting in a spot where it moved directly from the halfway point to the top of the inventory accumulation. Let me use a box to show you that, because it's easier to use a box. I'll use the GAN box. All right, so the GAN box goes from the approximate, that is what I have. What am I doing? I want my regular box, which is, I'll use this one.
Order filled.
So stop me out. But the box that I'm looking at is inventory accumulation versus inventory distribution. Distribution is going to be outside of the box. Accumulation is going to be inside of the box. So what are they doing? They're trying to break out. Remember, the buyers really want price action to work. They really want to hold the floor here. And so my suspicion is that they are going to try and build a base here on the bottom. So let's see if our NQ is about to get filled. Let's see, that's the 500 tick. Put it here, not quite yet. Hasn't broken through the VWAP. The ES has broken through the VWAP. See it breaking to the north. Okay. Did I trade on Friday? I did, but I only traded in my options account. I only traded options on Friday. Okay, so let's see. I like gold settlement here. Filled, double bottom, small position. Long one MNQ. Very nice. That trade's going very nicely. That long MNQ. Ashley, excellent. Great job. RTY broke the VWAP. Yeah, I suspect these traders are going to try
Order filled.
and get themselves up through. Whoa, don't stop me out here, fella. Come on. These charts are very, very messy. I should leave it to build inventory just a little bit more in my mind. Feels like there needs to be a little bit more of inventory. Okay, so now we can move the VWAP down, the anchored VWAP, we can move it to the low. And now for this patch, we are sitting above the VWAP and we're sitting above an anchored VWAP. So that tells us, hey, now I have a new trend. You can walk an anchored VWAP up to help you see where the floor of support is. That's a very good way to look at price action and say to yourself, yeah, I know what's going on here. I think I know what's going on here. Right? It's a great way to do it. You got out of your MES long. Well, good job getting in and then getting out, right? Anytime we're in the markets, folks, we have to realize that all we are doing is shifting inventory around. That's all we're doing, shifting inventory around. And that inventory event is going to help us make money, or it's going to lose money. But I promise you, the most simple and straightforward way to understand how the market moves is simply to look at the box and go, I wonder where everybody's buying. It doesn't mean you catch every single tick that's occurring. What it does tell you is, hey, here's where they are buying.
Order filled.
For the most part, that's what's going on. So as you look at this, here, let's say you're trading a 5-minute. You move your anchored VWAP, 3 candles to the left or whatever, right? And you can continue to trade until it breaks your VWAP. That's how you can run your floor. So if you can look at it, you could do it with 3 minutes, right? Your 3-minute chart, just go back. It's a great way to keep yourself on the right side of the trade. It's just simple. Now listen, sometimes we make money, sometimes we lose money. It happens. But the anchor of any trade is, can I see what the traders are trying to do in this move? So for me, if I had been alone, I would have looked at this and said, all right, they tried to hold a bottom. Here they are coming into the opening tick. I think they're going to sell it. So here they are coming into that opening tick. You can go to a 1-minute chart and you can watch them. Let's see how well they do it. Now notice, if they get up over the high of that opening tick, they're going, the people who shorted at the very open, what's their problem now? They're underwater. So what's going to happen if you take a trade at the open and all of the profit that you saw that looked absolutely, look at this thing missed me by like 3 ticks. Oh, it happens with me. I get too cheap. I want the very edges, and so anyway, you realize that if you're short, let's say you opened up and you went, I hear you, lady, whatever, just yammer on, I'm going short. And you went short and you had a ton of inventory. As you start to move up, you don't really want to give up your short trade, but you will be compelled to buy if the price action continues to move to the north, right? If you're short, you have to buy or you're going to continue to be underwater. If you're not short or you're not long, you don't really have to do anything. You can just sit and watch, right? You could sit and watch. But if you're short, you'll be compelled to buy if it breaks out over these edges. So what does that mean? That means that the breakout above these edges could be a very quick buy into another target space. Right now, they're moving back down. Where are they going to go? Well, let's take a look at what inventory did. Let's take a look at inventory. Here is a support that became resistance, that stayed resistance, that stayed resistance, and then became support again. Right? There it is. So if you're staring that down and you go, all right, that's the breakaway. Let me clone it because I know the market's fractal. Let me see if that gives me some information. So you can clone it, bring it to the top of the bot. Look at that. Right there at that edge. So you know, even more importantly, that if it does break out over that zone, you got yourself another buy. But if it doesn't, it's going to be a sell. Now, it could be, why am I choosing this buy here? Well, number one, I'm holding the pressure event. My moving average is, no, my VWAP, excuse me, my VWAP is sitting underneath me, so it's support. It's underneath me, holding that edge. I'm not in the box waiting for it to break out. That's what I want to look for. And then if it holds, I'm going to go to a higher low, I would imagine, right? I might even just, the volume profile says my buying sort of kicks up at around 25,500. So that might give me a really nice zone that I want to watch for frontline support. I want to see what the traders are doing in that edge. I'd like to see you have a daily session like the other coaches. Is that possible? Well, I do a daily morning call where I break down all the pieces about what I think price is going to do. I run a lot of stuff in the background here. I have portfolios that I've been building for a couple of decades that require a lot of attention. And so, well, thank you. I'm glad you watch me every morning. Thank you. It would mean if I just hope my insides get better looking the older I get. So I can get decrepit on the outside, but the inside is still shiny. Okay. Decrepit. I don't know if anybody ever saw the movie, the original Freaky Friday. It's where the teenager, I think it's Lindsay Lohan, goes into the mother, and she looks at herself in the mirror and she goes, "I'm the crypt keeper." That makes me laugh so much because some days I get up and I go, "The glory days are over, Missy." But it's all good. I used to be very vain, but God fixed me of that. So now I'm only slightly vain. I will put makeup on before you see me. So I do love kefir. I love homemade kefir. I do that all the time. I try to eat really healthy. Okay, so what are we looking at? We're looking at this collection of price action. What are the traders telling us here? What are they telling us? They're telling us, hey, right now, I'm only looking at 1 minutes right now, but right now, everybody's buying the floor. So legitimately, because you're above that VWAP, and again, you can anchor your VWAP up. And if you say to yourself, oh my gosh, the VWAP's so far away and it's bullish and I don't want to, how do I know where my stop is? Get yourself an anchor VWAP and walk it up. It'll say, hey, stay in the trade. See this? So it's going to the top of the box. Let's see if it'll break. If not, it'll come to the bottom of the box.
Order filled.
All right, so there it is again. So we'll pull it down. I am very surprised that the buyers are putting this much energy into the price action. So notice, we just did the measured move below. Let's clone it again. Look for our target. Right? Move up our VWAP. Here we go. Little step at a time, one after the other, easy peasy, lemon squeezy, right? It's just got me a little shy of that. I should have taken it up at the top there. But here it is. You hold it. I mean, we know how messy and noisy the NQ is, right? On the 1 minute. I do believe there's a lot of
Order
upward
filled.
pressure that is going to eventually show itself because we are breaking above that opening tick. And this measured move, this accumulation that occurred in the beginning of our move, easily we start looking at this. So remember, let's do it again. And here's the beauty of it. As an accumulation event widens or shows clean breakout, you can actually redraw that space and get yourself a bigger box. And that bigger box you can clone and say, all right, here's where we are. We're getting up, my next edge, 25, 6, and then eventually I've got myself my gap fill. That's what I'll be looking for. Now, please realize that when price action does this sort of thing, where are we with our anchored VWAP? Let's put it there. When price action savagely breaks down and they build a range and you've got a downward to flat VWAP, it is very likely that it comes in to kiss that VWAP before making another decision, right? My favorite thing to do is I like to build my inventory accumulation boxes on the tick. But as you can see, I use my big picture events to tell me what's going on in the first place. And so I like to use the 500 or 1000 tick. I will look at them both and I'll go, hey, what's going on right here? Notice, how do I get the bottom of the box? I want to see as many candlesticks touch that area at a significant zone. It's either a low or a close. And so this gives me my range event. And as it holds, I clone and I move it up. And I clone it and I move it up. And I hold the base. Where am I going? The traders are going to try and fill the gap. They are absolutely going to try and fill the gap. No doubt about it. Will they do it in one fell swoop? This would surprise me greatly. But they could. My thought would be, hey, let me go back down to my 500 tick. There's my anchored VWAP. I'm going to move it up to the breakout area. So what do I want to do? I want to try and get along somewhere around this zone, right near that VWAP action, where my anchored VWAP is. I know the big VWAP is down here. So I have to keep that in mind because it easily could go the big VWAP. But if you've got your anchored VWAP, 3-4 candlesticks away, it does a good job for you in terms of holding you close. So, if you do a 1 minute and you've got yourself 4 or 5 candles in the past, if it goes sideways, don't move it into the sideways one. Go into the last breakout zone until it fits the next breakout zone, and then you can add it to the framework and move to the upside. Right? Excellent. Any thoughts on the dollar? Well, I expect with Warsh that the dollar will start to stabilize and rise. I still believe that we have a trouble spot in the currencies with the yen. That's going to have to get sorted. I lost 30 trades 1R in a row. I think it's time to hang it up for a while. Well, this will be the last thing that I tell you. As gosh, time flies when I'm on here with you guys. So, here's the thing. What I notice with a lot of traders, myself included, depending on the day. I will take a trade. It will go poorly. I will get out. But instead of looking at my trade that I just took and say, okay, did you get in too early? What did you suppose that did not occur? And how will you fix that the next time you take on a position? You must allow the market to teach you the lessons that you're paying for. You know what I mean? You gotta learn those lessons. If you don't stop after a bad trade and go, what did I do there? So, for instance, I got Little Miss Hurry Up here, and I had one, I had the short in the wrong space. I got in, literally, I knew within, I don't know, maybe 5-6 ticks that I was sitting on the wrong side of the trade. I knew it was going to break out, but I also did not allow for my ATR to handle that wick action when it came back to the short side. So here's what I know. I took the trade. I had my anchored VWAP sitting, and where I took that short, well, there's a halfway spot well above that anchored VWAP. And so, well below that anchored VWAP. So I shouldn't have had any business being short at all. But I know immediately, okay, this is what I did. Let's go to NQ and let's not do that. Which is why the NQ trade worked out, right? It doesn't mean that you're not going to make mistakes when you trade for, 25, 30 years. You're going to make mistakes. The question is, after your mistake, you can go, wait a second. What did I do wrong here? All right, I didn't establish the proper range of motion. I knew there was top to bottom. I got rushed and said, you know what? I'm going short at the midpoint. Stop me out. Right? It took me into the long and then reversed because I did not leave enough room for the pullback. So it stopped me out again. And then it went to where I was going. Now, for a lot of us, that leads to really general frustration. But the fact of the matter is, it doesn't need to lead to frustration at all. Why? Because it's teaching you a lesson you just had to pay for. So learn the lesson. Learn the lesson. I am very sorry. You guys, go to the support ledge. Anne-Marie, usually just starting. Exactly, Anne-Marie, usually just starting to look for the next trade instead of analyzing the position. I promise you, if after every trade you adapt from a reassessment and review, you are going to start rising exponentially with your ability to execute and perform. It is your secret sauce. Crypto, you look a little betwixt, bewildered. You guys have, I'm not having any trouble. If you have any trouble, go to support. Go to support. Log out, clear your cache. That happens to me sometimes. You've got to have a still and steady mind. Why did you move those anchored VWAPs again? I'm moving them to help me pay attention to what my stop should be if I'm trying to run a chart upward with my price, right? So when you get in and you ever look at a trade and you're like, oh my gosh, I have no idea whether this is going to hold or not. What the anchored VWAP does when you walk it up the chain, it tells you, hey, everybody's still long. If price action is above it, they're still making money. The VWAP gives you the average price of the people engaged. Guess what? If you break the VWAP, they're going to start to sell, but if the overall trend is up, all they're going to do is buy it back. My suspicion is that they're going to try and buy it back at around 59.38. And if they don't, it's going to come back into the original inventory accumulation event that we drew when we first started looking at the chart. Right? What time is it for me right now? I'm in Florida. I'm on the Gulf Coast of Florida, and it is 7 p.m. I'm not so far over on the Gulf Coast of Florida that it's 6 p.m. There are folks there that are like that, but that's it. Yeah, it has been an hour. Bruno, thank you so much. I am just north of Naples. Just north of Naples, but that's a good guess. I'm not very far from Naples at all. So here is the backstory. Take what I'm giving you as a lesson, tweak it, throw the pieces out that you don't like, keep the pieces that make sense to you, and then just focus. Focus. Or, Amsterdam is on my list. I do love it out in that neck of the woods. Am I on every Sunday at this time? Yes, I am. Yes, I am. All right, everyone, take care. Remember, the buyers have got a lot to prove that to these sellers that, try to step on their necks on Friday. But we're sitting inside of Thursday's range. Thursday was the candlestick that precipitated all that selling, and Friday did not continue. So the fact that Friday did not continue tells me that buyers are going to try and push price up. Now, if price continues to move up and up and up and fills the gap, what's going to happen is about 7:30 Eastern Time to 8 Eastern Time, they're going to start unwinding those longs, and there's going to be inventory correction. If there isn't, look out. We're going to have a monster bullish day if there's no inventory correction. This is my thought. So you want to be careful and don't assume that you know what the market is going to do. Okay? All right, everybody, take care. Oh my gosh, look at that. I'm a stone's throw from a stero. Literally a stone's throw. All right, everybody, take care. I'll see you on the streams.